Ready to witness a seismic shift in the financial landscape? Brace yourselves, because BlackRock, the behemoth of investment management, threw its weight into the world of cryptocurrency. The announcement of their Bitcoin ETF sent shockwaves through the financial markets. But here's the burning question. How do you think this move will reshape the future of crypto investments? Let's jump right in. BlackRock. BlackRock Incorporated stands as a prominent American multinational investment management corporation renowned for its significant influence in the global financial landscape. Founded in 1988, the firm evolved into the world's largest asset manager, overseeing trillions of dollars in assets for a diverse clientele that includes institutional investors, governments, and individual investors. With its headquarters in New York City, BlackRock operates globally, offering a wide range of financial products and services, including mutual funds, exchange-traded funds, ETFs, and risk management solutions. BlackRock's market value exceeds $100 billion, solidifying its position as a key player in the investment industry. The company's success can be attributed to its commitment to innovation, risk management expertise, and a vast network of financial professionals dedicated to navigating the complexities of the global markets. What is an ETF? An exchange-traded fund, ETF, is like a diverse basketball team of investments you can buy and sell on the stock exchange. This team consists of various players, such as stocks, bonds, and commodities working together to match the performance of an index like the S&P 500. Investing in ETFs has advantages. Firstly, they help lower risk by spreading your money across different assets. They also make investing less mysterious because they show exactly what they invest in. ETFs offer easy access to markets worldwide, including hard-to-reach places like emerging markets. Another perk is their ease of trading, like stocks, giving flexibility to buy or sell at any time during market hours. Contrary to a common misconception, ETFs being traded throughout the day doesn't make them more volatile. Additionally, ETFs usually have lower fees than mutual funds, saving you money and potentially boosting your returns over time. SEC approval of Bitcoin ETFs. The SEC's approval of Bitcoin exchange-traded funds, ETFs, marks a crucial milestone in the integration of cryptocurrency into traditional financial markets. The significance of SEC approval lies in the regulatory recognition and oversight it provides to these investment products. Prior to this approval, the SEC was cautious about endorsing crypto-related financial instruments, expressing concerns about market manipulation, investor protection, and the overall volatility of the cryptocurrency market. The approved Bitcoin ETFs are expected to attract a diverse range of investors, including institutional players, hedge funds, and retail investors. By offering a regulated and mainstream investment avenue, the ETFs may contribute to a wider adoption of Bitcoin and other cryptocurrencies. The move also reflects a growing acceptance of digital assets by traditional financial institutions. Major companies such as BlackRock, Fidelity Investments, and others seeking approval for Bitcoin ETFs underscore the evolving attitude toward cryptocurrencies with the mainstream financial sector. While the approval signals a positive shift, it's important to note that it doesn't imply a broader endorsement of cryptocurrencies by the SEC. The regulatory body emphasized that the approval of ETFs does not equate to an endorsement of cryptocurrency trading platforms or intermediaries, many of which may still face regulatory scrutiny. Investors responded positively to the news, with substantial inflows into the newly launched Bitcoin ETFs on their initial trading days. Predictions. Cathie Wood, a prominent investor, expressed an exceptionally bullish outlook, predicting a potential 30-fold increase in Bitcoin's value to $1.5 million. However, cautionary notes have been sounded, with SEC Chair Gary Gensler emphasizing that ETF approval doesn't signify a broader shift in the agency's stance on cryptocurrency enforcement. Major institutions, including BlackRock and Fidelity Investments, actively pursuing Bitcoin ETFs contribute to the growing acceptance of cryptocurrencies. Arthur Hayes, co-founder of BitMEX, raises concerns about the potential influence of institutional players on Bitcoin, suggesting it could disrupt the decentralized nature of cryptocurrency. The diversity of opinions within the financial community underscores the speculative nature of crypto investments, urging investors to carefully consider risk factors and conduct thorough research before making decisions based on varying predictions. BlackRock Spot Bitcoin ETF. In just the initial 4 days of trading, BlackRock's recently introduced Bitcoin exchange-traded fund, ETF, has swiftly surged to a noteworthy milestone, amassing a staggering $1 billion in assets. This achievement establishes BlackRock's ETF as the frontrunner among a cluster of newly unveiled ETFs dedicated to tracking spot Bitcoin prices. The U.S. Securities and Exchange Commission (SEC) greenlit nearly a dozen ETFs designed to monitor the movements of the world's largest cryptocurrency, marking a significant regulatory shift following years of resistance. Following its launch, the iShares Bitcoin ETF IBIT.O by BlackRock emerged as a major player, boasting an impressive $1.07 billion in assets under management as of January 17th. Fidelity's Wise Origin Bitcoin ETF is also making waves, closely following with $874.6 million in accumulated assets. The evident preference for BlackRock and Fidelity can be attributed to factors such as lower fees and the recognition associated with these well-established names, drawing a substantial share of investor inflows. The collective investment inflows into the newly introduced ETFs stand at a considerable $2.90 billion within the initial 4 days of trading. Bitcoin prices. Bitcoin underwent a notable 15% depreciation in valuation over the preceding fortnight. This decline is attributed to specific investors leveraging the eagerly awaited initiation of Bitcoin exchange-traded funds (ETFs) earlier in the month. On Tuesday, the cryptocurrency encountered a 3% downturn, breaching the $39,000 threshold for the first time since the onset of December, only to exhibit a modest recovery during the latter part of the trading day. This recent descent signifies a retracement from the substantial surge observed in the latter part of the preceding year. This surge, fueled by escalated conjecture that the advent of mainstream stock market funds tracking the preeminent crypto token would entice a surge of fresh investors into the realm of Bitcoin. However, the performance of the ETFs, inclusive of those launched by prominent Wall Street entities such as BlackRock, fell short of anticipated earnings. This left investors who entered these funds grappling with consequential losses. The 10 ETFs, which commenced operations on January 11th subsequent to the endorsement by the U.S. Securities and Exchange Commission, collectively accrued $4.7 billion by the closure of Tuesday, according to reports from the crypto investment consortium CoinShares. Bitcoin, which was trading at $46,100 on the day of the ETF unveilings, has been on a decline ever since. Concurrently, Grayscale's fund, acknowledged as the world's largest Bitcoin investment conduit, witnessed an outflow of $3.4 billion following its transformation into an ETF alongside the new debuts. Analysts postulate a substantial portion of the funds infused into the recently introduced ETFs originated from investors exiting Grayscale. Notably, Grayscale imposes elevated fees compared to its counterparts, compelling investors to transfer their holdings to alternative ETFs. Douglas Coleman, a senior crypto options trader at XBTO, pointed out the projected influx of new capital into the ETFs did not materialize as promptly as the market anticipated. He emphasized most inflows are associated with investors transitioning from Grayscale to other ETFs. The transformation of Grayscale's decade-old Bitcoin trust has facilitated certain long-term investors, hitherto constrained to divesting shares in the trust at a notable discount to the Bitcoin price, to entirely liquidate their holdings. Consequently, the overall size of the fund dwindled from $28 billion earlier this month to $22 billion by the conclusion of trading on Monday. BlackRock could increase its number of ETFs. In the ongoing developments, there is anticipation that BlackRock might expand its portfolio of global exchange-traded funds ETFs pending the potential approval of the iShares Ethereum Trust. BlackRock, recognized as the world's largest asset manager, submitted an application for this particular fund in November 2023. The crucial point in this timeline is the looming deadline for the U.S. Securities and Exchange Commission (SEC) to make a decision on the application set for August 7, 2024. However, there exists the possibility that the SEC could issue a consolidated decision encompassing multiple applications related to Ethereum spot ETFs before the specified date in August. This scenario suggests a potential acceleration in the approval process for these investment vehicles tied to Ethereum, further shaping the landscape of BlackRock's involvement in the burgeoning cryptocurrency market. If you found this financial update intriguing, don't forget to hit that like button, subscribe for more in-depth analyses, and ring the notification bell to stay ahead of the curve in the fast-paced world of investments. As BlackRock's influence ripples through the crypto space, stay tuned for more updates on how this move shapes the financial landscape. Until next time, keep a close eye on those markets, stay informed, and may your investments thrive in this ever-evolving financial ecosystem.